It's shaping up to be an ugly day in the NASDAQ. NASDAQ futures are down 3%, which basically is the largest decline that we've seen since June 5th. And if you remember, this was a over 4% drop in the NASDAQ. And that led to a break of the trend line and a further move lower. Now, in terms of the NASDAQ right now, we do have another trend line break over here, and we could see it easily fall to 29,000. There is a 50-day SMA around 28,800 that could also provide support for the NASDAQ. Bottom line is, if we close this way in the NASDAQ, we could see at least another 1,000-point drop in the index. Now, the day is still new, so anything can happen, but it's going to be very difficult to shake off this bearish downtrend. Why is this happening? We had a meltdown in the Korean tech stocks, Korean index overnight. That has carried over to the tech stocks in the U.S. But of course, S&P is also down almost 1.5%. We see gold prices down 1.5%. We see the U.S. dollar up pretty much against all of the major currencies. So it's not just a story of tech stocks carrying over the flow. It is also a story of quarter end, month end, maybe half year end profit taking. We are getting to that point, and we could see window dressing. These funds, they may want to report some good numbers for their investors, and they want to report good numbers by banking some of those extraordinary profits they have made this quarter. So this could motivate and catalyze a deeper pullback in equities. We don't have any major U.S. data until Thursday. We do have some PMIs, but those tend to not really have too much of an impact. And don't forget, the less dovish, more hawkish Fed is actually bearish for stocks, not bullish. But U.S. Treasury yields are down today. Oil prices are down today. Those things tend to be positive for equities, not negative. But I think when the market sentiment is shifted one way, we have to respect it, because that is really the way that the market is moving today. In terms of Forex, we do have the dollar basically up against all the major currencies. Euro has fallen to a year-to-date low. This move is driven by, weaker German PMI services, although the German PMIs were mixed. We also have the big story is the yen. Now, not a big move in dollar yen, but you see the yen is up against all of the other major currencies. It seems like, with the BOJ hike, there's some comments coming out from U.S. Bessent and Japan that suggest that the U.S. may be more likely to support intervention from Japan, and that would be what's needed to really to cement a top in dollar yen. But once again, without U.S. yields falling, that could be very difficult to achieve. That's pretty much the main story. Sterling had weaker data, but that's a completely different story. I'm Kathy Lien with BK Traders. Have a great trading day.